What's going on, YouTube community? I have a review and an outlook for you. Currently, you're seeing the economic calendar from the past week of trading. And right at the actually beginning of my outlook in my last video, I was mentioning how this was added, the Fed announcement and just the volatility that was ongoing as a result of this as the market opened last Sunday. So it's actually currently Monday already, and the London open kill zone has gotten active as well. So I was trying to get to a point where I would do my reviews and outlooks after the market opened. And of course, just trying to make these things a little bit shorter. This is possibly going to be the shortest video thus far. And we'll get into the reasons why for that. But as usual, this is not financial advice. This is just educational and entertainment, my perspective on the way that I view the markets from the things that I've learned in my experience. But just a, a brief little look through real quick of the calendar from last week. So we saw that Sunday we had the surprise Fed announcement that had to do with the collapsing of the Silicon Valley Bank. And there's a lot going on with the whole banking situation, people putting the word crisis behind it. So we'll keep our eyes and ears open to any, news that could either tip my hand as far as potential moves to be looking for, or if it's just something that's overall confusing, causing a lot of uncertainty, would definitely be a indicator to, stay on the sidelines. But so after that, Monday, quiet day, no news. Tuesday, we had CPI. Wednesday, we had PPI. Thursday, unemployment claims, which is now a red folder officially. I believe this was the first time it was changed from orange to red, and I looked all the way out until May of this year, and they are all now red folders now for unemployment claims, changed from orange, which is medium impact, to red, which is high impact. The Treasury Secretary spoke as well on Thursday. And then on Friday, we also had medium and high impact news. And this week, and we'll just go ahead and just look at this week real quick before we look into the charts. So we had another Fed announcement when the market opened. So we did get some volatility as well this Sunday. Well, technically yesterday, but with the market opening. Monday, no medium or high impact news on the US dollar. Tuesday, medium impact existing home sales. Wednesday, we're going to have the Fed make a decision on interest rates. So I'm pretty much waiting for this event to take place. And then I'll be looking for setups Thursday, Friday, going into, the end of the week. Also noting that this will be the the week after this will be the last week of the month. So we'll also be closing the monthly candle at the end of next week. So just keeping all those things in mind, right? But so Thursday, unemployment claims, which like I said are now red folders, new home sales again. And then we have on Friday some high impact news as well on a dollar. So already been a pretty volatile open and London open kill zone, like I was saying. So with there not being too much anticipation for any big moves tomorrow morning or Tuesday, with the interest rate decision coming out Wednesday afternoon. So like I said, I will be studying price, but won't be too eager to trust any setups with something like this in the wake. just waiting on deck to bring some volatility to the marketplace. But now getting over to the charts, we'll start with the dollar chart this time. So on the daily chart, this was the opening last week. So we had a very aggressive, move lower. And what I was able to identify was this mitigation block here. So all of the selling that took place right down here that wasn't able to really get anywhere as far as profit, just came down to inefficiency. Once it got back above the mitigation block as well as that January 2017 high, which is the reason I keep monthly levels of that are key levels currently. I believe this is January 2017 high is a key level right now, since that was something I was looking towards us getting to, right? Short-term support, broke that, short-term resistance, broke that, now short-term support again, right? But my eyes are really just on this mitigation block, noticing how anybody who was a seller within here has been able to now close those sales. They were underwater, they were in drawdown, right, during all of this move. And now once they returned down to it, they were able to close those positions, right? And so I don't have any bias for this week. Like I said, I'm waiting for that Federal Reserve interest rate decision to be announced. And then Thursday, Friday, and going into the last week of the month, I'll be looking for setups. Pretty much just set up going into the second quarter of the year. But just to drop down to the 30-minute, right, get a little bit of nitty gritty, those daily dividers and such. So this was a huge gap opening last week, and we pretty much stayed below it Monday and Tuesday. Wednesday, we had a nice run back above, which did not last very long. As you can see, we peaked once we basically filled in all of this inefficiency here, came back down to it, and then at the close, we opened up with a gap back inside, basically, and then we drifted lower, consolidated inside, right? And then going into end of day, Thursday, end of the week, on Friday, we traded back below it. So ultimately a consolidation week on a dollar, but it was the key was just it was showing a lack of strength, essentially. Not that it was terribly weak, especially with a move like this, highlighting the most impulsive move. Everything else was chopped for the most part. And so it's no surprise to me why, with the dollar index trading like that last week, and to just talk about how it opened up so far this week, opened up with a gap lower again, and we are inside of that range, pretty much of the gap that we opened at, sitting on top of that daily mitigation block. So not much as far as confluence, nothing to really take from this until the dollar starts to, gravitate higher or lower, how it responds at different levels within these ranges and at highs and lows, right? That's going to kind of be the characteristics that are going to determine any sort of bias using the dollar index. But now looking at Dow Jones, we got the hourly on the left, daily on the right. So this area up here was where I was looking for price to trade to for me to take sales from. As you can see on the daily chart, we never quite got there. Basically a consolidation on the daily chart for Dow Jones. That was not necessarily the case with NASDAQ. NASDAQ was actually pretty bullish. And I'll just go to that real quick, just so you can see NASDAQ was pretty bullish last week, and the S&P was relatively consolidating as well with the Dow Jones, except for the fact that, right, it did reach up above Friday's high and traded into that inefficiency on the daily chart. And you see the reaction since that. We've just been, chugging along lower, which was beautiful. I think I'm going to start to focus a little bit more on the S&P, just given the fact that it's typically really clean structure. even when you got Nasdaq and Dow Jones kind of contradicting each other in a sense, the S&P will be relatively clean and offer some precise setups. So I'm definitely going to be taking that into consideration with my own personal trading. But you know, this is a solo sport. Have to find what works for you. So as I'm, in my development and still figuring out what works best for me, that's just one of the things that I'm considering. Felt like I share that. One key thing also, if you notice over here on the hourly, how it says on this magenta, maroon, whatever color line it is, it says NAS as SPX HL. So that is denote to me there was divergence where the Dow Jones between Monday and Wednesday created a lower low Wednesday, taking out Monday's low. Nasdaq and S&P actually made higher lows. So they did not take out Monday's low on Wednesday. They actually, had a higher low. And that also makes a lot of sense as to how you see they traded on Thursday. Although Dow Jones itself was bullish, had a bullish day on Thursday as well. It was a bullish day that didn't go out and take out old highs, right? Those Thursdays on Nasdaq and S&P did trade above old highs intra-week, which Dow Jones was not able to confirm. And so basically, if you look up here on the daily chart on the right side, although we did not get up to this level, a level that I was not watching and I am now, is this volume imbalance here. So extended that out in time, and that's what the this yellow or golden rectangle or shaded area is stretching across price on this hourly chart that we seem to, keep trading into. And we did get above, but this is what I would consider hugging, right? So this was, uh, you can look at this as like a fake out, false breakout. And then you can look at this as like it was hugging that zone, that range. So not really a commitment above, traded above, yes, but trade above probing liquidity. We did take out Tuesday's high on Friday before we started to collapse. But ultimately, all Dow Jones did was just, like I said, consolidate on the daily. You see that on the right hand side here, which is consolidation. And this is how it looked on the hourly chart. Basically, a lot of seek and destroy in a sense, no commitment either way, but still some fairly large moves that could have been taken advantage of in the different kill zones for sure. But coming into this week, so we open up here, so we open up with a gap higher. We immediately, what's crazy is we immediately trade up to last week's opening price and we reject it back down into that other volume imbalance, which is denoted here. And so what I'm watching now is that we're able to break below here with some sort of commitment, right? A large range body leaving an inefficiency as well. I would love to see that kind of making this up close candle in here an order block with that move lower. I would like to see same concept, right? Price revisit that inefficiency, which would then be somewhere around here. And then I would be looking to take a trade inside of that range to target this daily volume imbalance as my exit. But currently you see the reaction. First time we got an engulfing candle with this see us trade higher for the next day and a half, take out some buy side liquidity, not exactly everything I was looking for, these equal highs, and then that daily inefficiency. But what we're seeing now is another bounce. This candle is much larger than this down close candle was. So for this candle within the last 35 seconds here to engulf, seemingly going to be impossible. So we'll see how this goes, if there's any sort of continuation before the interest rate decision, or we're going to continue to play this range back and forth and then possibly see some sort of a breakout with the interest rate decision on Wednesday afternoon. But that's pretty much it. You see, told you gonna be short and sweet. There's not much of a bias. We just have our levels that we're gonna be monitoring, And we'll of course be studying, price, nothing like seeing it live and just getting into the nitty-gritty, multi-time frame analysis, correlating asset, right? So intra-market and inter-market analysis, things like that. There's nothing like doing it live, looking at the old data where the candles are still and there's no activity, there's nothing to really entice you, like what goes on, right? The engineering of liquidity. So yeah, just for anybody that's interested in getting better, right, in your development as an investor, as a trader, as a speculator. I just want to say I highly recommend spending some time live on the charts. You don't need to be thinking about making any money or about taking any trades, just about looking for repeating patterns that one could possibly take advantage of on a consistent basis. But yeah, with that, I'm gonna call it a video. Thanks for tuning in. Like, comment, subscribe. I'll holla at y'all in the next one. Peace.